Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobris. Well, so much of investing really is a global affair. What happens in China, what happens in Japan, what happens indeed in Korea, Russia, Brazil, can affect what happens right here in New York. But right now we're focused on Europe, where the Greeks are on the verge of putting together a deal that would, among other things, call for a 20% cut in the minimum wage so that they can stay current with their plan to come up with the money that would allow them to pay what's due on March 20th to the EU, the IMF, and the ECB. But really the outcome was not in doubt so much. Right before Christmas, the LTRO, which allows European banks to borrow at very low rates, kind of made the problem seem already solved, superfluous indeed. So banks can, for 3 years, borrow at low rates. It kind of helps keep the other problem areas like Portugal and other places afloat. And the euro, because of that, has made a big comeback. It was down as low as $1.26, $1.27, back to $1.32. Euro rising is a gauge of the willingness of the market participants to take risk. Risk on. The risk clapper has been clapped in the on position for, definitely since the beginning of 2012. And pour tout le monde, il y a une bulle marché. Here's the ACWI, the All Shares World Index. Look at that, coming off the bottom here. Actually, October 3rd, significant bottom for most markets around the world, moving higher. You see most markets around the world, the emerging markets, the developed world, doing the very same thing. While the euro has risen, it's all about the Benjamins, Ben Bernanke and Benjamin Franklin. The dollar has taken a little bit of a beating. Here's the beginning of 2012. Dollars come down. This is the dollar index, more or less. It's the UUP. It corresponds kind of with the dollar index, but on a daily basis. The UUP is up 5% from September, but down in 2012. When the dollar is cheaper, companies that make things and sell them overseas are doing a lot better. Caterpillar, one of them, going after a new high here, $114, $116 was the old high back in April. CAT looking pretty good. You've also got companies reporting earnings. Casual dining, a gauge of the willingness of consumers to go out and spend money at restaurants when they could eat at home for cheaper. Buffalo Wild Wings blowing it out of the water right there. Go wild. Its shares up 17% on Wednesday after reporting blowout earnings. The flip side of that, Panera Bread. Panera got toasted. Look at this here. It was a real bun splitter. The company beat on EPS, but analysts didn't like what the company had to say going forward. Stock was down 7.2%. Panera Bread, a heck of a nice run from October lows, around $100, up to $160, but down a lot today, 7%. After hours, Cisco reported earnings that beat on the EPS and sales. Stock up about 3.5% after hours. John Chambers, his company, up about 40% from its low last year. Chambers nailing it. EPS at 47 cents, revenue $11.5 billion for the quarter. CSCO looking decent here, off to the races, closed on Wednesday at 2043. Look for it to open a lot higher on Thursday. China, the FXI right here, this is the ETF, the FTSE Xinhua 25, which tracks the biggest companies in China, the blue chips, if you will. You can see it's above its 200, above its 50, and above its 10-day moving average. The FXI moving a lot higher. Companies like Baidu making a recovery, but you can still see the downward bias in Baidu shares, trying to get way above 130, not having a good time doing it. One thing that leaves the Chinese rally in a bit of doubt is the fact that Chinese small stocks are not rallying the same way that the large stocks are. Here you have the Shanghai Stock Exchange Composite, and you can see it's still looking like a waterfall down. Nothing really has broken its fall yet. You want to see small stocks and more risky assets lead your way out of bull markets if indeed they are confirmed uptrends. Apple, this sucker is just hitting new highs, a lot of enthusiasm. What do we have here? $476 per share. This is a stock that was about $400 not very long ago. Apple looking very good. Earnings are still coming at you fast and furious. Really almost done though, because all the big names are reporting. You've got a few home builders. Keep an eye on the builders too.